It is September 9th, 4:30 EST. This is Alma Peters. I'm the founder and creator of Alpha Wave Trader method that based on pure price action for entry and Fibonacci for exits. This method applies to any instrument and any time frame that has price, which clearly each and every instrument does. So I will ask you that you think about the instrument you'd like me to take a look at, but please do pose the question the following way. For example, 5-minute S&P 500 or Apple weekly, not just Apple, not just S&P, not just Amazon. I need to know the time frame you're trading, so it could be anything from tick charts to weekly, monthly, hourly. So in this presentation, I will share with you what Alpha Wave Trader method based on, but first let's remember US government required disclaimers, and I highly encourage you to read this as it reminds you to recognize the danger of trading that involves risks. And I highly encourage you, and we highly encourage our students to always remember that. So please do spend time reading this disclaimer. This presentation is for education purposes only. Past performance is not necessarily indicative of future results. All results are hypotheticals and are not results of actual trading. So what is Alpha Wave Trader method based on? It's based on trading pure price action. I trade in our trading room, and Danny and I teach our students how to trade pure price action on any instrument in any time frame. So for example, let's take a look what had been happening on ES, which is S&P 500 future this morning. This morning when we opened up, price was at these levels, and ES was chopping immensely, reminding us once again that intelligent and conservative trader always aware of the news events, especially during days like this. Well, a lot is happening and the world is awaiting announcement from our president tomorrow night. So what has happened on ES when I spelled out very clearly that ES had been incredibly bullish? For 3 hours during trading hours, ES had done absolutely nothing. This was the dance on ES we witnessed during trading room hours. But if you know how to trade Alpha Wave Trader method, you had a fantastic opportunity to enter at 1663 area, which transpired after we closed trading room. Once again, very powerful trading opportunities that continued all the way into the danger zone levels. But all of these levels had been drawn on September 8th. Far in advance, those who trade Alpha Wave Trader method knew that bulls were here with vengeance and that rally had a lot of power to the upside. And as it happens to be what has transpired today, when this rally picked up this steam immensely, there we go. When Russia asked Syria to put its chemical weapons under international control, Syria replied that they will gladly welcome such proposal. This, we knew that this bullish rally will start very far in advance yesterday. And as soon as Syrian foreign minister replied, rally picked up an unbelievable and powerful steam after this endless dance, when I was receiving endless questions, why aren't you shorting ES? It was very clear that it was not prudent to short ES, that bulls were still in control. And what are we observing currently? We're observing the exhaustion of the bullish trend. This is what happens when price reaches danger zone. All of these levels are Alpha Wave Trader proprietary Fibonacci levels. So if you know where these levels are, and if you are an oil trader, then you would know incredibly clearly if you are paying attention to larger time frames, which is exactly what we teach you to do, to respect 1 hour chart highly. This was a dance on oil during our trading room hours when oil bounced for 3 hours in a row from decision point 1. This is where we had taken short into, and this is where we taken long from. Short into 50 ticks, knowing to completely expect a reversal. And this was the short we had taken in our room on 8 range chart. And what are you witnessing from 109.95? And what are you witnessing has happened when this trade reached danger zone level? Trade became incredibly exhausted, and trade staged the reversal, once again reminding us that it doesn't matter if we trade oil 8 range or oil hourly, monthly, weekly. By the way, weekly charts are my absolutely favorite time frame, and it's music to my ears to witness that we have graduates trading much larger time frames, which we have incredibly interactive environment in Alpha Wave Trader Club, and that's where we discuss who what trades and who what does. And one of our very recent graduates, Jim G, whose testimony is posted on website, audio testimony, is actually trading Forex daily, which is incredibly powerful to see how much students care about power of trading pure price. So there we go. If you care to listen, we started recording audio testimonies, and another new one will be posted as of tomorrow. So on that note, let's take a look and let's see what oil is doing. As I had been spelling out since yesterday, tomorrow before the news, I would love to see oil at 108.40. As you can see very clearly, this is a stepping stone. If you are trading 1 hour, this is your first target, this is your second, this is third. For 3 hours, oil respected this level. And that's what we had been trading. Very critical, very powerful level. The end of the minor trend. Here is level 2, decision point 2, and here is a danger zone. So once you learn these levels, you know to never ever enter short into this end of the minor trend. This is the most critical level in the market structure. This is where trend decides, do I want to become major or do I want to remain minor? And this is where trend had been dancing for 3 hours. Finally, after trading room hours, collapsing much further down. And here we are. Danger zone had been reached. Short trend is tired. Formula is identical as the range charts we trade in our trading room. And that's exactly where I'm posting an invitation for you to come and join us as of tomorrow. So let's continue on, as I will constantly bring up the examples and various time frames to share this with you. So due to Amnovia lagging out, let's review this again. So yesterday, as you could see, all of these levels had been drawn yesterday. And that's the advantage of trading pure price. You know everything far in advance. Nothing is lagging. And this is very clearly what AS had been showing us. Very powerful rallies setting up. So despite the incredibly small and very narrow range that we witnessed on AS during the trading room hours, this very powerful rally set up. And if you trade by Alpha Wave Trader method, you had very powerful opportunity entering at 1663.50 area. And there we go. That's where the power of knowledge comes into play. Very powerful setups, setting up well before and well after trading room hours. And just to rehash what I had shown earlier on oil. On oil today, we watched this dance. If there are any oil traders here, this is when we opened up and price collapsed into this level. And this is where all Alpha Wave Trader students know never, ever, ever, ever to enter into this level. This is very powerful level where we enter short into and we're monitoring for the exhaustion of the trade, as decision point 1 is a brick wall and the end of the minor trend. This is where price danced for 3 hours, and this is where we had then taken short into on range charts. Except on range charts, this is trade exhaustion level, danger zone. This is where I trailed incredibly carefully, very, very close by, spelling out. This is my trade exhaustion level. Trail very, very carefully because two things happen when price reaches danger zone. Either major trend reversal or major trend correction. And there we go. As you could see, as soon as danger zone had been reached, 48 ticks later, price reversed in very sharp and very volatile formations as expected. This is exactly where it correlated with decision point 1 level. This is what we use as our guiding light, 1 hour chart. All the decision made based on these levels. None of the trades are taken without these levels. And that's what makes a world of difference. So you always trade only between the levels, never into levels. And this is a level where we're taking longs from, not short into, because decision point 1 is always present. It is the end of the minor trend. It is the end of the correction. This is the second level, and this is the third. And this is how price moves each and every time. And this is what I trade in our trading room, and this is what we teach in our education course. So therefore, we're using no software whatsoever, no indicators whatsoever, simply pure price. So this is all you will ever see on the charts. And this is all that you need to see if setups are powerful, if trends are weak, if structure is very meaningful, or if it's worthless, if it's meaningless. Like this is music to my ears when today multiple students left saying, hey, this is a bunch of flappuccino. I'm gonna walk away. It's a waste of my time to babysit this. Which is very, very critical to your trading success, to separate corrections, to separate fluff with very, very powerful structure. So therefore, each and every trade I take and what we teach in the course, we're entering based on pure price action, using market structure and exiting using Fibonacci levels. So why do we do this? And why do we think it's powerful? Because each and every indicator in the market is delayed. Each and every indicator tries to tell you what price did after the fact. If you ever worked with programmers, indicators, or any other tools, you would recognize that each and every indicator tries to identify what price did after the fact. So therefore, typically how indicator is designed and developed is when mathematical formula applied. But the problem is, it never tells you how the market will behave in the future. But if you browse your charts, if you go back, it looks so powerful. But if you try to trade indicators, it doesn't exactly work like that. For example, one of the most powerful indicators in the markets and what I used to use is moving average crossovers. But they're incredibly delayed. Yes, moving average crossovers work if markets are trending very powerfully. But 80% of the time markets are stuck in range, in very, very small structure, which each and every time you try to enter, you have to reverse. When you try to go long, it shows you to go short and vice versa. So this is where it becomes dangerous. This is where it's very bad idea to trade. And once again, showing you that this indicator, one of the most popular indicators in the market, is incredibly limiting. So a lot of times when we have students who come to us, we look at their charts, we want to scream. We have sometimes students who come and been trading 20 plus years, and they say, I know nothing about the market. Because if you would take a look at the structure, if you spend years looking at all of this stochastics, all of these volumes and God knows what nonsense, you never pay attention to the price, do you? When each and every indicator from these flashy red and green arrows tries to imitate only one thing, price. But price is completely ignored. So therefore, it doesn't matter how much time trader spends in front of the computer. Trader has absolutely no knowledge of markets, has complete lack of market clarity, endless conflicting signals, complete laziness, no knowledge of the markets whatsoever. And bottom line, no indicators that works all the time. There are very, very few indicators that work only on certain instruments and certain market conditions. But there is not an indicator that works 100% at the time across all markets, across all the time frames, and across all conditions. Such indicator does not exist. Price present in all instruments. Fibonacci present in all instruments, in all markets and all times. So once you learn how to trade pure price, you can trade anything. So there we go. This is all you will ever see in Alpha Wave Trading Room. Therefore, you skip all lagging, all shady, cloudy, delayed indicators, and you focus on truly the meaning of the markets, which is pure price action. Recently, I received an email from one of our graduates who is in Moscow, and we have a couple of phenomenal graduates, including still some in the course, who grasped the method within first week and spent years and years and years trading indicators without accomplishing anything. So there we go. Pure price action is actually quite simple. All you have to do is remove all the indicators to be able to see how markets move. So there we go. What is Fibonacci? Fibonacci is an incredibly powerful concept that actually surrounds us in everything. Fibonacci was discovered by Italian mathematician in the early 13th century. Leonardo Pisano detailed a number sequence which was found to impact our everyday lives. So this very, very powerful sequence that created by adding each subsequent number is what creates golden ratio that found in absolutely everything that surrounds us, including price. From nature, flowers, trees, ocean waves, to human body symmetry, to facial symmetry, to dance moves, to music, to price action. This is very, very clear confirmation that nothing in this world is random. Nothing, not even pure price. Price continue moving in this sequence, evolving from very, very powerful trend structure to incredibly powerful formations. And based on very simple rules. But if trader comes to the markets and doesn't know what this means, it becomes incredibly overwhelming. After spending years and years reading pure price action, it had been incredibly easy for me personally to see the price, and that's exactly what I share in Alpha Wave Trader course. And this is how price moves consistently. Price is incredibly simple, moving in 5-wave sequence on major trend and 3 waves on minor trend. 3 waves is the structure of the minor trend, and it's always present, as we witnessed today on oil. This is exactly what's very, very critical to identify, the end of the wave 3. This is where price ends, collapsing or finding very, very powerful support and making a decision. This is how you learn to trade pure price. It's very simple actually. 1, 2, and here is the wave 3. Ta-da! 3 hours. Price took its sweet time deciding if it would like to give wave 4 and then 5. That's simple. 1, 2, 3, 4, 5. Know where the end of the wave 3 is, which is decision point 1. Do not ignore this level. This is the most critical level in the market structure. Never, ever, ever, ever enter position into this level. This is always your first target, your second, your third. Price decided after dancing at this level for 3 hours to finally become a major trend. And that's exactly what we would like to see before the news tomorrow. So what am I expecting tomorrow during news on oil? I expect to learn that we don't have enough supply of oil, and around 108.40 I will be looking for buying opportunity. Entering short anywhere at these levels is a very bad idea, unless we're going to get a meaningful bullish pullback. And that's the same endless dance price does time and time again. So if you know how to identify power of the waves, you know to only trade wave 1 and wave 3. You would stay out of the wave 2 and wave 4, and you would never acquire a position at the end of wave 3 because it gives you absolutely no time to enjoy the powerful trend structure. So, and for example, that's what we're witnessing currently on a beautiful S&P 500 future hourly chart. Currently, price had formed very, very powerful 3 waves and giving us a corrective dance. Once again, if you're a prudent and conservative trader, you would not be acquiring a trend position at these levels. You're witnessing 3 hours ES is doing absolutely nothing. This is where we're monitoring for very powerful short trend reversals, and we'll take a look at much larger time frames. And that's all we teach in our education course. That's simple. Become a prudent and conservative trader. Enjoy the inception of the trend, wave 1, and inception of wave 3. Stay out if price is anywhere near these levels. Not complicated, but it requires patience and discipline to play by these very, very critical 4 rules you learn in the course. So there we are. This is very much typical market structure. This is what you are witnessing here. Major trend. Very, very classic and very, very powerful. And this is what happens when price reached danger zone levels. Price had collapsed as expected. And this is where we're monitoring for short formations. That's all there is. So if price comes to the danger zone levels, prudent and conservative trader would completely stay out. and monitor patiently for reversal formations. Acquiring trend position anywhere at the danger zone levels is simply very aggressive trading. So there we go. We only have a few more minutes of this presentation left, and I look forward to answering your questions. So there we are. Even if market forms incredibly small ranging waves, it still forms price waves. It still gives you targets. It's just very, very critical to respect when price tells you the targets should be small. You can be going for phenomenal, powerful trends and powerful structure if market is ranging. It just simply doesn't exist. So it's very, very peculiar to see traders who trade with fixed stop losses and fixed targets. Doesn't matter what instrument, doesn't matter what time frame. It's absolutely not applicable. Very, very critical to see what price is telling you, as everything we trade based on price action and what price action on that particular time frame tells us. So each and every stop, each and every target based only on that. So there we go. Big as a range, big as a targets, big as a stops, big as a time frame, long as a trade, big as a targets, big as a stops. Very, very analytical, very, very common sense approach. Not random. Nothing random about alpha wave trader method. So here's an example about trading market. As you could see, this is world-renowned Fibonacci levels that respect it even during very, very powerful trading formations. And this is the most powerful wave in the market, as I spelled out earlier, wave 3. Entering anywhere near the end of wave 3 is simply bad idea, because this is the end of the minor trend and this is the end of the corrective structure, which is always present as a price structure. So there we go. If you're entering, you are entering here. You are not entering here or here or here. Knowing when to stay out is one of the most critical components of successful trading. Exact same formula. Pay attention to what happens if you're entering short position. Seems like of incredibly powerful bearish trend here. Nothing good happens. Very bad idea. You're entering at the trend exhaustion level. 1 second, let's bring up the charts. So I look forward to seeing you EMD for range. Alright, let me see prior questions. So let's please start with futures first, then Forex, EMD for range, SPY 1 minute, which is S&P 500. So those are the only two questions I see so far on futures. EMD4 and S&P TF. William, we used to trade TF. Do you know what happened with TF? That's why it is so important to become knowledgeable about the instrument you trade. What happened with liquidity of TF? TF is vanishing as a future. Headquarters of Russell in what city? That's how we learn. That's how we educate our students. Alright, on this note, EMD was the first question. Let me bring up EMD. Futures first. 1 second, where is EMD? What do I mean by instrument? I mean instrument is what I'm looking at. Future Forex, it's Apple, S&P, oil, that's what means instrument. Alright, so let's go. And it's very, very important that you state the time frame, otherwise I will pick any time frame I would like. Just a moment, bringing up EMD, then S&P 500. That was the first two questions I saw. One moment. There's a bit of a problem with EMD. Is EMD still on September contract? One more time. This never happened before. Technology, doesn't that drive you crazy? Let's see if we'll get more data right now. Much better, and I will try EMD once again. Sounds like a plan? This was very powerful rally that started on Dow 10:30 this morning. And this is where it became very dangerous. The long on Dow was from 15,003 level. As you could see, Dow respected decision point 1 highly, continued its rally, reminding you to never ever inquire trend position anywhere near this level, the end of the minor trend, and the end of the major trend. Simple. Price danced at this danger zone level for 2 hours, giving endless bearish corrections, and finally flew through. Reminding you, that's exactly why I named this level danger zone level. YM does not have liquidity of S&P 500. YM is only $5 per tick. You will have to trade a lot of contracts to achieve the profits that you achieve on S&P. That's $12.50 per tick. Make sense? And each and every stop selected on each and every instrument exactly the same way. It doesn't matter if it's Russell, Oil, YM, Apple, Amazon, or whatever else. So on that note, I will migrate to EMD. We'll try again for range. Let's see if we can get data on EMD. Ta-da! We did! Let's get the range charts going. Whoever asked about EMD, please let me know that you are here. But again, because I believe only in Fibonacci numbers, I would never ever trade the number that's not a Fibonacci number. Make sense? 4 is not Fibonacci number. It doesn't give me any symmetry. It doesn't give me anything. Therefore, the smallest number I'm in favor of is 5. Very choppy corrective structure. So if you know and you trade alpha wave trader method, you would completely stay out of here. This is where no indicator on the planet will show you this. Chop. This is exactly what we watched on ES today for 2 hours. Expect it. This is where knowledge comes in a play. This is, you find the corrective structure all the time. It's present in the markets 30 to 40% in the time. Here's corrective structure. Expect it. Know when to stay out. No indicator on the planet would ever tell you so, would it? And there we go. This is where the rally picked up. This steam on EMD today. Let's take a look since the market opened, because rally started much sooner. So let's see where the rally had ended. How predictable. From 12.12, first target, data, reminding you, respect the end of the minor trend, respect the end of the corrective structure, and here's the danger. Is this clear why I named this level danger zone? The trend exhaustion level? Unless you're going to get a powerful pullback, unless you're going to get a powerful correction, acquiring trend position here is not a conservative and prudent trading. But this is very, very critical. This is first highest probability target because corrective structure and three-way structure is always present. Major trend, not. Make sense? Peter spelled out. You learn everything in the course. Everything based on pure price action. Price action tells me where all of these levels will be. I simply read price action and I apply a Fibonacci tool that's present on any platform you like. NQ5 range. Let's take a look on NQ5 range. And then I will take questions on Forex and stocks. Let's do stocks first. And unless there is any other question on future, this is it. We'll go to Forex and we'll go to stocks. So there we go. Here's the rally that started on NQ 5 minutes. It barely blasted through the danger zone levels, and here's the major chop. This is what happened when price visited this level for the first time. Completely reversed, giving you endless corrections. Once again reminding you how essential and critical it is to know what not to enter into. That if you think you're riding the most spectacular trend and you're entering into these levels, here comes the surprise that no indicator on the planet will tell you better. NQ and YM are incredibly similar. They're $5 per tick. We traded NQ and again, we constantly rotate different instruments. The liquidity is not there. You want to be part of serious institutional volume. Simple. NQ is $5 per tick. Yes, it's a great instrument to learn on. If it speaks to you, use NQ or use YM. Please let me know next question if you have on Forex or stocks. This is how essential it is to identify where the end of the minor trend is. Third day in a row and very powerful collapse. S&P 500 future by far. So there we go. Those very powerful oil traders that are entering into this level did not see this coming. So tomorrow's event is very important. This is potentially inception of very powerful bearish trend, as we witness with incredibly powerful collapse. As you could see on our videos, for a couple of trades I recorded from our trading room today. You can see on YouTube it was very volatile collapse that I highlighted to you earlier on 8 range charts. Because we expected this. Because decision point 1 had been reached. The end of the minor trend is here. So when price reaches this very critical resistance level, this is where trend decides. Is this the end of this rally? Or shall I continue further on? So if you would take a look on Oil Weekly. Oil Weekly telling you stories. This is what we witnessed, and all of these levels are drawn in April this year. This is a major chop that started on oil since the end of July. Is this clear, the importance of this level? Knowing what not to enter into, where to monitor for these levels. We looked on oil anywhere from range charts to minute charts to monthly to weekly. Is that clear? Know where these brick walls are and all of these levels identified by the inception of the trend. That's simple. So once again, guys, do remember, our amazing president is speaking Tuesday night. I'm being sarcastic. So I expect markets to be incredibly comatose unless the announcement will come out from Russia or Syria, because right now it had not been a happy world, and it's very, very critical to respect these factors. And I loved, loved, loved what we witnessed in our education room on Friday. On Friday, we knew incredibly clearly that we expected that pullback. And what are you witnessing currently on S&P 500 daily chart? Where's price here? First time since early August, ES daily is at the ultimate destination. Very, very critical level. ES had made it there today. So, if you're a prudent and conservative trader, the price is telling you very, very clearly, don't ignore this. Bullish trend overextended and getting ready for pullback. And all of these levels price spelled out on August 30th, far in advance. Today is September 9th, and there is price. Question about SLV daily. Clearly this is a stock, correct? Looking on stocks, trying to pull up if I have SLV. Nope, it's not on major stocks list. I have SLE, SLM, SLB. Apple I absolutely have, so please do ask questions about major stocks. Nothing that's not widely traded as clearly. I am not a stock trader. I do have availability of the stocks. And we'll absolutely pull up gold daily. Fantastic questions. Oh baby, that was a fantastic collapse on Apple 5-minute chart. I love, love, love that structure. That collapse on Apple 5-minute chart has started 1 hour to the market close. There you go. Where did the short ended? The short from 507.29. Not to be ignored. There you go. Reminding you know where danger zone levels are. And here's the fantastic second pullback. And let's go on Apple Daily. On NinjaTrader, I prefer to use 1440 chart. And I love looking back on Apple all the way back to Thanksgiving when the massive collapse had started. Because at that time it was incredibly personal, as my dear friend has a lot of stock, a lot of Apple, and she did not listen. That was very painful. So if you're a position trader and you're trading Apple, currently Apple is in a corrective structure. 510 is critical, but this is completely expected. Take a look where Apple is currently. This is why it's giving you this endless corrective chop. You had very, very powerful shorting opportunity on Apple from 505 to the downside. This is correction. 510 is absolutely critical what Apple will do during that time. But this is a reminder. If you're a prudent and conservative trader, you are not trading Apple now. If you had taken and enjoyed this rally from 422, you trailed very, very carefully. You had another opportunity to re-enter at 470. And that's all there is. So I will take a look on gold daily and I will share with you a couple of results that the students had sent me. Gold is exactly the same as oil, although I do prefer oil to gold because oil has more liquidity. Gold daily, yes, we're discussing in Alpha Wave Traders Club, gold daily. Very, very powerful. So there we go. This was spectacular inception of the trend. And there we go. Da danger. Da know your levels. Yes, I don't look on ETFs. Thank you, Cormac. So that explains why I couldn't pull it up. I would only take a look at Forex, stocks, and futures. So if you would take a look on gold day hourly and daily, major chop as expected, decision point 1. Trend made up its mind, visited danger zone, gave us very powerful bearish correction. Is this clear? How important these levels are? And it doesn't matter what you trade. We have quite a few Forex traders. One of them is incredibly recent one. Options traders. Yes, we teach on futures. Unless student is in the mentoring course, then we're working on the instrument of your choice. And Danny, educator who teaches group sessions on Friday, I teach, and Danny teaches all the other classes. I highly encourage you, if you want to speak with Danny or any other students, please simply send an email. I bounce your email or I will call you back to other students. We have an open forum. Absolutely no secrets whatsoever. Tesla, let's see if I have Tesla. TSL. TSS, no TSL. Rings home, beautiful Irvine, California. It's not on major stocks list. Any other questions? Please let me know. Alright guys, so please do remember tomorrow expect incredibly slow day in futures because Mr. President speaking tomorrow night. These world events are not to be ignored. There is a reason why there is no news during today and Tuesday all the way until Thursday because it's incredibly critical time and it is to be respected highly. So if market is going into corrective sleepy structure, I'll answer more of your questions. So thank you so much for being here. I look forward to seeing you tomorrow. Have a great afternoon. And if one thing you learned here today, please remove all the indicators and start paying attention to price because that's what truly matters in your trading. And more time you spend trading pure price, more you understand and learn market structure. Thank you, Willem. Thank you, traders. Thank you so much for being here. Look forward to seeing you tomorrow. Bye-bye.